Hi, this is Paul from globaltradingsoftware.com, and this is a futures day trading tutorial using the NinjaTrader version of our xBrat algo for the signals, the bias depth heat map for confirmation of those signals, and then the manager to manage the trades. So this is oil on the 5 minute. So with the xBrat algo, we use Heikin-Ashi. It's designed around those Heikin-Ashi averaging candles. So this is very, very crucial. So we're going to get signals throughout the day, and they're going to be graded, 6-star being the highest, like a 6-star hotel. We need the confirmation from the bias depth heat map, and then we need to manage them sensibly. So some of the settings I've got, there's no different settings on the xBrat algo. I'm actually on the scalping setting for the bias depth heat map. So that starts off, at the 1 minute time frame and works up 6 different time frames to give you that depth of that bias, whether it's neutral in yellow, red in bearish, or green in bullish. And then on the manager, I've got this on day trading aggressive setting. Okay, so let's just go through Friday for this, and we go through the signal, the confirmation, the entry, the trade management. So we get a 5 and a 6-star signal at this stage. So when we get a 6-star, we are looking for an entry 1 tick above the high of that candle. As soon as it prints, it will only print when the candle closes. You see how it pulls back here at the moment, and then the bias depth heat map goes red and yellow and green and everything. So as it starts to come back up again, we can see here we're going all green. So all 6 time frames are green. So this is good for our entry. We're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, so that's within my 15. One of the rules that I have is that if I get a signal candle here, I will enter that long as I've got the confirmation within 15 candles of that signal candle. That's on candle 12. Very, very happy. So that's the signal, the confirmation, the bias depth heat map's gone all green. My entry is simple, 1 or 2 ticks just above the high of that signal candle. We're in. Stop loss sensibly just below this pivot that was just printed before we pushed up through. So one of the things to manage this trade is, one of the things we look at is to make it risk-free as soon as possible. We can't do that until we get some sort of, I would say, confluence in the price action, slight pullback, or just a slowdown in that momentum, and we get that at this point. So with the manager, we can see a green candle is an up candle. It also has higher than average volume here. A grey candle is an up candle, okay, but it's got less volume than the previous candle, and then we get another green, higher than average volume, and so on and so forth. And then we get a rejection of those highs on a higher than average volume. You see the candle body here, so it still closes bullish, but it's a rejection of those highs. We then get an indecision doji, and then it starts to go again. So at that point, we can say it's tried to come back against the direction of the trade, and we can make it risk-free. We then have another push up. You see how the manager's pushing here. The ribbon for the manager is all green, which is telling us to stay in. We get another push up, and then we get a pull back down. We get higher than average volume red candle this time, but it's what we call a 1 candle wonder, because the following candle then is an indecision doji, and it starts to go sideways. So that's a good point then just to go below this pivot and lock in some ticks. So we entered around 81.53, and we're at about 81.98, so around about 45 ticks ish, profit locked in. We're going sideways at this point here, so we can say now that this seems to have run out of juice. We need to be ready. So when this turns red, from when the ribbon turns red, we're 4 candles behind. 1, 2, 3, 4. So this one's just closing here. Where my cursor is, that's just closing there. When that candle turns red at 82.21, this is where we can be ultra aggressive and say to ourselves, actually the manager's telling us to get out now. It's telling us to stay in at this point, but now it's telling us to get out. So we get out at 82.21. So that's a big trade. We're talking 54, 46, 66 ticks. Okay, really great trade there. If I just go right to the end of this, we can see that the cloud is actually 4 candles in advance. So that's what it's telling you to do. If we're live, we're getting out at that point. So we're taking on 66 ticks. Now we're looking for a short. So we get a 5-star sell signal at this point. Now we can take 5 stars, but we look down at the bias depth heat map, and that highest time frame down here at the bottom, it's just reversed, is neutral. So we've not got totally that confirmation. We come down further, then we get a 6-star sell signal. All 6 time frames are red this time. We're good. Same entry strategy, 1 tick below. Where's our stop going to be? Now, in theory, it should be above the previous pivot to before we got the signal. However, for me, I like to put it just above. If I've got a 5 then a 6 star, we're getting momentum building. Okay, so I probably put it 1 or 2 ticks just above the 5-star signal candle there. It's still a reasonably good stop. Now we then also on this 6-star candle here, we're all red, we're ready to go, we've got the confirmation. That's our entries, not for 1, 2, 3, 4, 5, 6 candles here, so it's still within my parameters, within the 15 candles after the signal candle. We go sideways for a while, doesn't take out the stop, and then it just pushes down with quite a lot of force here. We see that the ribbon remains red at this point, comes back down. We have a pullback, but that pullback has dots below the candles or no dots at all. So it's either average or lower than average volume against the trend of the trade, if you like. We see then we get a higher than average volume candle at this point, but a rejection of the highs. That's the manager telling us the behavior. That's the first higher than average volume on this pullback, but it's rejected the highs and it pushes down again. And then eventually the ribbon turns green. Count 4 candles back, 1, 2, 3, 4, we're here. Okay, this 80.23, we got in at 81.33. That's a 110 tick trade. So we're 176 ticks on oil using the xBrat algo for the signals, the bias depth heat map for that confirmation, and then the manager for to manage the trade. Simple rules for, again, I've made hundreds of these videos, simple rules for that entry, and away you go. So this is a very, very simple, it's a complex strategy behind the scenes, but it's very simple to follow, simple and repeatable, okay? Very simple entry strategy when you got the signal, but you're not going to enter until you got the confirmation. Then once you're in, you use the manager to manage the trade. It's semi-automated. It's telling you, it's giving those graphical keys and cues when to get in a trade, when you've got a signal, when you've got a confirmation, and when to get out of the trade. Very, very simple rules. And not only that, this strategy works the same no matter what platform. So this is the NinjaTrader version. If I just pull now the TradingView version, because I know a lot of people on our platform use the TradingView version, this is that same long trade. There's a 6-star buy, comes back down, goes long, and then the ribbon turns red, get out. There's the 5, the 6-star short. On the 6-star short, there's the bias depth heat map, all red, go short. Cloud doesn't turn green, comes down red, we get out at that point here. Exactly the same. Remember on the NinjaTrader, the first candle to give us higher than average volume on this pullback against that short trade, higher than average, but it rejected those highs, okay? 5-minute Heikin Ashi candle. Very, very, again, it's a complex strategy behind the scenes, but very, very simple to follow. No matter what platform you're using, whether it's the NinjaTrader version first or this TradingView. Very, very simple. Check out the links below and get hold of this trading indicator.